My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Today my special guest, someone a little bit different, somebody who works and manages a family office. So as you're aware of, if you've been listening or watching the show for a while, quite often we interview a lot of syndicators and developers and folks that are, actively doing deals like that and typically raising capital. Adam Robbins is kind of doing things a little bit differently. He's got access to the capital. He's looking for deals, and he's been running this family office for quite some time. So that's what we're going to be chatting about. Adam, welcome to the show. Great to have you.
Hey, thanks for having me. I appreciate it.
So Adam, for folks that aren't familiar with exactly what a family office is, because we hear that term thrown around a lot, I think a lot of people think they know what it means. Can you actually tell us what it means to you?
Absolutely, sure. So I run a single family office, which is obviously different than a multiple family office. It's pretty self-explanatory. It's one family that's very high net worth that invests in real estate. And I run the day-to-day operation of the properties that they own. And, I kind of run the business for them.
And how long have you been doing that for, Adam?
I've been doing that I've been with this particular client since the end of 2013.
Oh,
and I've been working with them on a full-time basis since 2017.
So that tells me you're doing a good job.
Yeah. So, well, I try.
So what do you guys with your office, what do you invest in? Up until now, what's been kind of your buy box?
So we invest primarily in retail, office, and industrial properties. Mm-hmm. And typically we look for properties that have a value add component. So we're not buying the brand new, beautiful, stabilized properties. We're buying stuff that typically when we go in, it's undermanaged. It may have, a higher vacancy or, not at stabilized vacancy. And obviously we're looking for more competitive pricing on a deal like that because we're going to put capital into the deal. Mm. And so we own office buildings. We own some small bay industrial properties. We own retail shopping centers. We own a couple of single tenant net lease deals, which are like really, I guess for, what we own are some dark Rite Aids that were originally, they were Rite Aids, and then Walgreens bought out Rite Aid. And they're kind of just like what we call check and go properties. Mm-hmm. I mean, they're probably, there's something that's going to happen. Either we're going to, either they're going to buy out the lease from us and we're going to do something with probably level the existing structure and then redevelop it, or somebody will buy it out from us. But we had a couple opportunities back in early 2020 to buy some, basically high yielding deals that, you have no responsibility whatsoever. You just get a check every month.
Yeah.
And those don't come along too often, but
well, that's what I was going to ask you, Adam, is how involved are you and your team in the day-to-day management of the properties themselves?
Well, with the exception of those two, very involved. So I'm in the office 2 days a week, and the rest of the week I'm going to different properties. Mm. And it's really, I'm actually pretty much involved in every aspect of the portfolio, the accounting and the budgeting and the financing and the leasing and the whole thing, soup to nuts. So, and it's the kind of business where, you have to be hands-on. Yeah. It's not the kind of business where you can sit behind a screen. I have to make sure people are showing up. I have to make sure, people are, if they say they completed it, that it's actually completed.
So it must be a pretty tight geographic area that you guys focus on.
Yeah, we're in the tri-state county area of Florida. So that's Dade, Broward, and Palm Beach counties. We have something in Daytona. We have a property in the Panhandle on the West Coast, but I only go there like once every other month. And then we have some properties in New Jersey, but I have people up there that handle those. So for me, that's really just more the finance, accounting, and leasing than it is of the actual showing up and making sure the security guy is there and that, that type of thing, and that there's no leaks and all that stuff. But I love real estate. So for me, it's, it's not really something that's a problem. I mean, I actually enjoy doing all that stuff. And, you meet a lot of people in this business.
Yeah.
So it's I always find it interesting.
Well, I've spoken to a few folks that were kind of hesitant about the whole office building side of real estate these days, especially through the pandemic and whatnot. What have you guys found? Because it sounds like you have a fairly significant number of office properties.
Well, I think Southeast Florida has a little bit of a different story in terms of office leasing than other parts of the country.
Okay.
We've actually had a pretty strong office market.
Good.
And, the buildings that we have are all just about full. And not only are they full, but we have people that come in all the time. I have a waiting list for people that are looking for office space, but it tends to be smaller spaces. People want 1,500 square feet. They want 2,000 square feet. The buildings we have are a little bit more conducive to like larger tenants.
Yeah.
But we do have some small spaces, but that's where you find the biggest demand. It's not as easy to find a 5,000 square foot tenant or a 10,000 square foot tenant. And I think that is just a result of companies are more efficient. They don't need as many employees. I think,
or their employees are still working from home sometimes these days, right?
Yeah, but we have like a lot of medical tenants, not what I would call hard medical, like, we have psychiatrists and endocrinologists, which don't really do anything invasive and kind of, especially in
you don't have to set up operating rooms and stuff.
Yeah, exactly. We actually do a plastic surgery center, but that's a little unusual.
Mm-hmm.
And that requires a lot of TI money, tenant improvement money. So they actually was more what they invested into the property, because that would have been a big investment for us. But, we make deals. And and we are also, especially the property in Dubeau, they're putting up like a big Mount Sinai Medical Center is building, big facility not far from us. So I think that's also going to drive medical leasing in our building. So it's like, attorneys and medical users mostly. And
interesting.
Buildings we have in Fort Lauderdale are mostly legal and other industries adjacent to legal, like title, because it's not that far from the courthouse. So, that type of thing. But it's not the same story in Chicago, and it's not the same story in Atlanta.
Exactly. It depends. It's marketing.
There are a lot of markets where office is really struggling, and quite frankly, the story may be for those markets that they're going to be looking to do conversions to residential, because I'm not sure if there's going to be enough demand in certain markets to fill up all the square footage that's currently just sitting.
Yeah. So Adam, the other thing I wanted to ask you about, which is fascinating, is in addition to all this work that you're doing for the family office, which I'm sure it keeps you pretty darn busy. It sounds like you also offer some consulting. And one of the things you consult people about is you consult other real estate investors on how to connect with family offices, how to work with family offices. I know a lot of people are very interested in that. Everybody would love to tap into quote unquote unlimited source of capital by partnering up with a family office. Tell me a little bit about how you help people raise capital from family offices.
Well, I think first of all, primarily is I talk about expectations.
Okay.
I mean, family offices are typically looking for a certain kind of deal. We're not looking for the $1 million deal. We're not looking for 6 units. And we would do.
You don't want to help somebody with their duplex conversion or something.
Right. Unless it was, we could do 10 of them at a time. Then that would be interesting. But we're typically in the space of, I would say, the 10 million to maybe $50 million deal.
Mm-hmm.
And a lot of family offices operate in that kind of space. So for family offices, I think a lot of it is about, kind of economies of scale. They're just typically not interested. They're interested in larger transactions where you can get a certain amount of capital out the door. So somebody who's, it's like, I want to buy I can buy a house for $300,000. I can put $200,000 into it and I can sell it for $7,000. It's typically not a family office deal unless you can do 10 of those at a time. So I manage the expectations.
Got it.
Now, if you're, of a warehouse that's 100,000 square feet, that's, at the edge of a market that's had a lot of, adaptive reuse, which is basically taking something that was used for something else. And now they're making it. Now that's, I would say, that's a deal that a family office would like to look at. So I kind of just say, well, what kind of deals do you have? And, what are you looking to get out of it? I also explain to them that family offices want to work people that has skin in the game.
Okay.
So it's not like if you're bringing a deal and the only contribution you're making is bringing the deal, then you're really not an investor. You're a broker at that point. Mm-hmm. And the compensation for a broker is a lot different than it is for principals.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. So what are you guys typically looking for skin in the game from a principal?
We'd be looking for like 10%.
Okay.
10% of the equity. That's a good position for a GP to be in. And
then what are you folks willing to put in?
On certain deals, we put in 90% of the equity. Yeah.
Now, in those cases, are you more just on the financing side of things, or are you looking into, is it more of a partnership kind of a deal?
No, it's more of a partnership. I mean, it's so, on a $10 million deal, if you can borrow 6, so then there's $4 million of equity that you need to close, and we'd be 90% of that capital stack, and then the GP. Typically, we have some kind of we would go in as an LP, but we always want to retain, oversight of accounting. Yeah, because we want to know where the checks are going. We want, not that we're, you remember, you're a partner. Equity is a little bit different than lending.
Yeah,
a lender is a lender, but an equity partner is really family. So when you want to work with family, you want to know who all the people are. Yeah. So it is a little bit different than, if we were going to do financing, which we don't typically, it's not something we do. It'd be, all we would be looking at is how can we become whole if the principal defaults?
Well, just like,
is the real estate going to get us out and make us whole? But
I think I'm more interested in the mindset of the family office as an equity partner. So let's say that example you talked about there, Adam,
right,
where the operator brings in, what do we say, 10% of the 4 million, so they bring in 400,000. Right. You guys bring in the 3.6, get financing for whatever, there was 6 million or whatever it was. How would that typically work on an ongoing basis? Like, how do you guys divvy up the profitability or the cash flow or that sort of situation? What does that typically look like? Is it 90-10 or is it some other?
Well, if it was 90-10, it would be something called pari passu, which means everybody gets, relative to what they put in.
Right.
But there are other ways of doing it. There are different kinds of structures, which they call waterfalls.
Mm-hmm.
And usually the more sophisticated investors will typically set it up so that, based on certain performance levels,
they get compensated.
They do better if you do better. So it's like, I don't know if you ever saw the commercials for Fisher Investments. There's a company, I don't know, you're in Canada, but in the US, we have a company called Fisher Investments. So they run all these commercials and they go, we're a fiduciary, right? We're not a broker, we're a fiduciary, which means we are responsible to represent your best interests, whereas a broker is really only responsible for making a sale and a commission. And their line is, we do better when you do better. Yes. So for sophisticated, JVs, it's like they say, if you achieve this IRR, this is the split. If you achieve this IRR, this is the split. So the better the GP does, the more percent of the profit he's going to get.
The more money everybody bets.
Yeah, right. More money that's his incentive. Yeah. I mean, if you don't really have an incentive, you're kind of just going to be, you'll do what you'll have to do. I mean, you don't want to lose money and, you're going to make money. But if you have an incentive, then you're really going to be working the deal for everything you can get. So, and those are all kinds of spreadsheets with, different toggles to how, best case scenario, worst case scenarios, and all kinds of things. So, but that's typically the way it works. It's like if the GP gets the property to perform better, he will get a bigger distribution. If he doesn't, he will get less of a distribution. So that's typically the way those kind of structures work.
Well, thanks for explaining that. So
no problem.
As of right now, we're recording this beginning of 2026. What do you guys have that you're looking forward to this year? What kind of deals are you looking for? Where do you see the family office going this year?
Well, we're actively looking for, again, value-add assets in either South Florida, South to Central Florida, or the tri-state area of New York. We own, most of the stuff we own is, it's in northern New Jersey up there, and Queens and Brooklyn, and parts of upper Manhattan. We own about 2,500 multifamily units, but I'm really not involved in the multifamily. So I'm really involved, and I put together their commercial portfolio, and that's what I run. So we're looking for value-add offices, anything 50,000 square feet or more. We're looking for retail, probably not grocery anchored because it's just too competitive, especially in South Florida. I mean, those things are trading between 5 and 6 caps. So it would, a good strip centers that, maybe just are undermanaged, that may be located to, adjacent to or in close proximity to other, regional shopping centers, small bay industrial properties. And one thing we're, again, looking to do in 2026, which we've been kicking around, is just some kind of alternative investments in real estate, like investing in private debt, which is, bridge and mezzanine money for, developers, higher yielding, probably 12% fixed rate, short term, terms of 12 to 24 months where you're getting paid 2 points. And those are loan amounts between, say, $250,000 up to $500,000. And that would be kind of, focused on residential developers who buy, homes that are in disrepair. And we prefer them to be larger homes. And then we would fund the renovation costs. And in Florida, there's a lot of these developers that they will buy homes in some of these higher end communities, but they may be for an elderly couple that is going to assisted living. They haven't put any money into the property in the past 5 years, and you need a certain amount of capital to bring that up to market.
Yeah.
So anybody who knows anything about luxury homes in South Florida, I mean, there are all these developers, Toll Brothers, GL Homes, homes that were selling that were brand new in 2001 that was selling for $700,000 and now they're on the market for like 1.4 or 1.5. So there is a good niche there to do those type of short-term loans where you can, not really have a whole lot of risk because the demand and is there for these, this price point and this size and these gated communities, and you can get much higher yield than other opportunities. So I think a lot of it comes down to just the difficulty we've had in the market in the past 2 years with interest rates and the fact that pricing hasn't really been, too cooperative with what I would say the middle market buyers, though, not the institutional buyers. Because institutional buyers, the big guys, the Prudentials and the Relateds and the BlackRocks of the world, they have a completely different rationale for what they buy and what they spend than a family office.
Adam, this is fascinating stuff. I think you mentioned the best way for people to connect with you is via LinkedIn. How did they do that?
It's Adam D. Robbins, MBA. It's verified. So if you type in Adam D. Robbins, MBA at, my company's Allstate Florida Development, it'll come up. Just hit me a connect.
Sounds good.
I'll maybe send a little note. I saw you on the podcast. Like to connect with you, and I'd be happy to connect with you. My website is arcrealtydiligence.com. My contact information is also on there. You're welcome to shoot me an email, but I'm on LinkedIn every day, so happy to connect with you there.
Adam, thanks so much for being on the show. I really appreciate it.
I appreciate you having me.
All right, everybody, take care, and we will see you on the next one.
Sounds good.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.